President Trump says he will stay the course on tariffs, right? Well, it comes as billionaire investor Ken Fisher says tariff fears are overblown. Listen to this.
The tariffs are actually super bullish in a way that nobody seems to understand. You take all the tariffs anybody's ever talked about, the ones we've imposed and the retaliatory, you add them up and they come to a total of tariffable items of $640 billion. That's all the ones they've talked about, not fully imposed yet. If that maximum tariff rate was 25%, that'd be a $160 billion tax increase, $160 billion potential tax increase in an $80 trillion world that's growing GDP this year in nominal terms at maybe 5% with 3% real and a couple of percent inflation. That's $4 trillion approximately of nominal GDP growth. So that 160 is 4% of 1 year's growth rate. This is minusculely small. When people make a big fear over a little bad, it's very bullish.
Aha. Let's see if we can follow that. Progressive Wealth Advisors Jack Ablin joins us, and from Horizon Investments, Chief Strategist Greg Valliere joins us as well. So I'm trying to figure this out. Jack's got a little smile on his face, and Greg looks like he just saw a ghost. So you're not. I don't think either one of you. Well, Greg, I'll start with you. What do you think? I mean, because the argument, I did follow what Ken is saying. What Ken Fisher is saying there is that we think this is such a big deal. It turns out it really isn't. And then that's bullish for the market. What do you make of it?
3 quick points. Number one, we could win this fight. I think someone's going to cry uncle, and I don't think it's going to be us. Number two, it's a huge economy, as Ken Fisher said, and I think in an economy this big, the impact might be 2 or 0.3% on GDP, maybe a couple of tenths on inflation. But the big point, number three, in my opinion, is that with all this uncertainty, if the economy does get a little weaker at the end of the year, I think the Fed may go a little slower on rate hikes in 2019. I think that's a good story.
That is interesting. So that's almost, or taking Ken Fisher's side of this. Jack, what's your take?
I don't know. I think he's quoting Herbert Hoover when he was Commerce Secretary in the mid-1920s. A little tariff here, a little tariff there. It's not such a big deal. The good news here, though, is that this is a man-made crisis, so that in the event that we do begin to spiral downward, or we start to see perhaps a second Asian contagion, so to speak, we can reverse course pretty easily. And so I do think that this isn't a meteor from outer space. This is policy that can be reversed. But to suggest that, a clampdown on global trade is a good thing.
We don't have examples
I wouldn't go along with that.
We don't have very many examples for a reason. I've always said when we ask people about it, and they go back to Smoot-Hawley, which was things did not, to Jack's point, work out very well there, and that's probably why we don't have examples. But Greg, it is the markets have been hanging in, more than hanging in, come off their highs today, a little bit more than hanging in, and I got to think a lot of that is because almost what Jack's talking about, people kind of assume that this is not going to go too far, and if it starts to get there, we'll just back off. We'll cut a deal. The president will claim victory, and off to the races we go again. That seems to be the Wall Street logic.
I must confess, I thought the markets would react more adversely. They have not. As you say, they've hung in here very nicely. So what to watch in the future? I'd say this week I would watch a resumption of talks between the U.S. and Mexico. That might prompt the Canadians by the end of the month to get back in the negotiations. U.S.-China is going to be a nasty fight. That's going to last. That's going to last for many, many more months. But I think the overall impact on our economy and our markets will be modest.
And the NAFTA thing might be the first one to get done, it looks like. I mean, it looks like that's why we're watching that so closely. Jack, what about you from an go ahead.
From an investment point of view, there's a paper I'm doing this week suggesting that this global race for kind of just hegemony from the trade side is actually very bullish for our country's largest companies. In fact, if you heard Marco Rubio on Fox last week, I mean, he was downright panicked about the potential of China overtaking us. So I think that knocking Apple or some of these mega cap companies down a peg just because we want to rein them in, they may have second thoughts if they think that our foreign competitors aren't going to do that. So I think they're going to let these mega cap companies go, and that has pretty interesting implications for the investment space.
It would. Actually, if we had more time, we'd actually talk a little bit more about this. We got to go today, gentlemen, but Jack and Greg, it's good to see you both again.